Here we go, Warriors. How you doing? Alexander, how are you? Happy New Year to you and Sinatra, James. Hi, Bran, Michael Weisman, Paul, Ryan. Great to have you back. How are you?
Hello, mate. Happy New Year.
Happy New Year to you. So, while you were gone, we got a little turn in the dollar late last week. You have your sea legs under you.
Yeah, I'm getting them. Yeah.
What levels are important in euro now for you, buddy?
We got a bit of a level. I've got a bit of a zone down 1870 to 1830 or 108.70, 108.30.
Okay.
That's my area that I'm looking at
Okay.
to see if this pulls up. But you know, when it's like this time of year, you've got to let the market do its thing, haven't you? See where it wants to go to. I'm a bit disappointed 110 hasn't held. I would like to see 110 held in this move back because otherwise this just all negates that break we had above that 110.
Yeah. Okay. And did the last 2-3 days change your view in U.S. dollar yen? I think 146 is viable.
It's
What do you?
possible. It doesn't change my view. This bounce, if you come out a bit further, um, just zoom that chart out a bit, you can see we're still well within the trend from the 152 highs. Even that end of year low was still a new low compared to the others.
True.
Yeah, can it bounce? Absolutely. I think it's got to go some though to see a decent bounce. Probably need to see yields, 10-year
Yields.
yields
Yeah.
pushing up back above 4% as well. But no, I'm still short this one, and as a banker, Japan trade, and still happy to run it and take profit when it dips.
Okay. So it does look like this was a pretty nice divergence in 10-year yields that we had last week near the lows compared to this reading.
Yeah,
So I don't know, 415. And this is what 120 bip move from 5. So I
yeah.
mean, is it really unrealistic to look for 60 bips after a move like this? Takes it to about 440, which was a real, if you look left, 440 was pretty important.
Yeah, I think the question
So
is, have we come as far as we've have done with Fed pricing? Pricing cuts. We had all that into the end of last year. If the market got all excited, pricing 150
yeah,
basis points and whatnot. So I don't think there's much left in that tank right now until the
could it
data
be
either.
that the market got ahead of itself with too many cuts priced into the market? And what we're going to do is reprice some of the dot plots for less easings. I mean, I even heard a guy say the Fed's not going to ease this year because he
Yeah,
doesn't think there's going to be recession. So um, maybe the market just, everyone's, been waiting for this turn from the Fed, and maybe they just got a little too exuberant on what they were pricing in.
yeah, absolutely. Always happens. I mean, we were pointing it out all the way through this.
Yeah,
I think, even as early as November or even before that, what were we pricing? 2 cuts in 2024, and then it ramped up
yeah,
to 6 cuts. The
right.
market always goes too far. That's what it does, and that's what I wanted to trade a bit of. That extremism. So I think now we're probably coming into New Year. Everyone's got a calmer head. So I can see yields. I can't see any real reason for yields to bounce significantly, but I can't see any reason for them to sink further. Now the market's done its run around with pricing, so I think we're going to be trading between the data, and we've got a busy old week. We come slamming back into a busy week of data this week. ISM a bit later,
Yeah, yeah,
NFP Friday.
right.
So it's all to play for. And this early these early days, I like to see what the market wants to do. Has it stopped doing what it was doing before the holidays,
Yeah.
or is it going to continue doing that now that we've come back to full market? So this week's a week of discovery, as I like to call it.
Do you ascribe to the the belief that as January goes, so goes the rest of the year. Some people use like a day, each day in the first week of January would represent a larger time frame, like a quarter or a month. Or do you ascribe to that the market kind of tells us early in the year what kind of year we're going to have?
Um, it can do. It can do. Certainly not the first couple of days, but probably from next week we'll know.
Okay.
Because as I say, you have the market doing what it was doing in the latter part of the year. We have the holiday where everyone just closes up the books and whatever, and then everyone comes back in the new part of the year and sets out their trades again, sets out what they think the Bank of
Yeah.
Japan's going to do, what they think the Fed's going to do. So you tend to do get a lot of moves in the early part of the year that then form the basis of what happens the rest of the year. So yeah, I agree with that.
Okay.
But then when we get to February, I probably won't remember what happened in January anyway.
Yeah. So Nasdaq's been the weakness. Yesterday was twice as weak as the S&P. Today it's almost twice as weak. Um, there you go. We're going to be challenging some moving averages. People thought it was an aggressive call for. This is where I thought the NAS 100 could go 14.6. And could this be part of the repricing? And it's mainly, the big weaknesses and stuff like this. They downgraded Apple, it gapped down, but even some of the leadership like Nvidia could be rolling over. Amazon could be rolling over. AMD, which was a star, exploded to the upside. Uh, to me, it looks like tech, and really the Mag 7, and they're buying other things. So they're using, I think, the Mag 7 as a source of funds.
Yeah,
There's Google. I mean, I could pull up every um, Mag 7 stock here, and I bet you would say, well, I wouldn't buy it. You may not want to short it, but you wouldn't buy it. Would you buy that? Would you buy this? You know, so,
yeah,
just something that is manifesting. I'm not saying they can't make new highs for the rest of the market after this pullback, because I think that's all it is. Even though it might be a little sharp, uh, the leadership may not be the mags. It's going to be other sectors. So just a potential change of leadership uh, in the market, and everyone likes um, the small caps. And I'm looking at this. Here's the banks, and I bet if Greg was here, he wouldn't say this was bullish. It looks like an ABC back to resistance, and the Russell looks much better, but Russell's the most rate sensitive one, because they're the banks, and the recovery in bonds took pressure off their books, but it kind of gave a tell Friday. And I'm not saying that we can't make new highs in the Russell, but we could see a little scary break to 180 before there's a continuation move. That to me is what I think is going on, is that we got a little bit too exuberant with everything, and the dollar, too many dollar bears.
yeah.
I wanted to get to Blake because he kind of surprised me yesterday when he started talking about this year he's looking for a euro
Russell to shit the
under
bed.
no euro under parity.
Oh, well, I think parity is going to be where we can be buying somewhere,
Oh,
something down
okay.
there.
Well,
Yeah.
you said 110 Dixie.
Yeah. I mean, well, I think that's possible. It doesn't have to
That's
be
up
all
here.
euro to do that. Like I'm pretty bullish the dollar, and I'm sorry, Ryan, I know you're on the other side of this, but I'm pretty bullish the dollar yen right now. I think yields have a lot further to go. I don't think US data is going to be super weak, at least to kick off the year. We're going to get a taste of that today, obviously. And then I also think rate expectations of cuts are way, 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 way overblown. So I think the dollar's got a long way to run. And I think the consensus trade, and you may have missed this in the week ahead video. I know you were traveling for your I know you're traveling for your for New Year's. And by the way, Ryan,
Yep.
Happy New Year, buddy.
Yeah, happy New Year to you, mate.
So every time Thanksgiving comes around, you give us a hard time and you're like, "Oh, you guys are off for your pre-Christmas holiday." And we're like, "Yeah,
Practice
we're
Christmas.
days off." And then we don't see Ryan for like a month and a half. So, Ryan, I don't want to hear anything about this anymore, ever. Anyway,
not till December this year.
I was harassing you yesterday, and Dale's like, "Oh, you got to wait till Ryan gets here." I'm like, "Yes, that's right. I'm gonna have to give him hell yeah today." Anyway, no jokes aside, you probably missed the week ahead video, but you know, every week ahead video that I do, and I have for the last month, I do like my, you know, setups for the week. Then I review the setups from last week and then give you fresh setups for this week. I do that every week ahead video. And I've been doing that now for like 6 weeks. And kind of reviewing, you know, what we did, you know, talked about the week before. But this week ahead video was obviously a look into 2024 a little bit. And my opinion is I think the dollar yen is going to be the best short this year. Like I kind of put it like this. If you shorted the dollar yen right now and you open your eyes 6 months from now, you'll probably be happy you shorted the dollar yen. But between now and the 6 months from now, no, you know, sometime in the next few months, there's probably going to be better levels to be a seller in the dollar yen. That's my view. Like, I think that I'm going to be able to,
46.
yeah, like 146. That's kind of where my, well, you just saw my pattern in play go out, Dale. I'm just kidding. The target is 146.
Okay.
And I think, you know, getting up there is doable. But that's a place that I want to stake my claim and, you know, be short. You know, it doesn't have to be 146, it could be 145. And, you know, it depends what's happening at the time. But I do think that the dollar recovery, you know, will have some legs. And I've been trying to short the euro for the last, like, you know, 24 hours, trying to get some shorts off, but it's the thing's trading damn heavy right now. So
The only other feature I want to just bring up, because I've been covering it here, is the gold silver ratio.
yeah.
Looks fine, like it's finally breaking out, and you know, you could see how many times it's tested it. What's that 4 hour here? That's on the daily. I mean,
No,
look at how many
that's a
times.
big deal. Yeah.
Yeah, look how many times it's knocked its head against this level. So if we close up here, people could, you know, silver squeeze guys, they could take a nap for a while.
Yeah, I was gonna say
Because
you might not see Stelios for another month.
yeah, so we'll see what happens here. I mean, long term, I don't know where the count is going to take this, but I think it's going to be eventually a great shorting opportunity. Maybe we're going to get back to here or
So
here.
can I I'm gonna say this really quick, and this is someone I guarantee you does not, well, he doesn't know anything about the markets. He just knows what I do, and he's a friend of mine, but he doesn't listen to the show. He could care less. He approached me yesterday. He said, "Hey, I'm gonna buy, you know, 10 ounces of gold. Should I do that today? Or, you know, maybe I'm gonna buy like maybe a couple ounces a month. What do you think I should do?" And I'm like, that guy's never talked to me once ever in his lifetime of knowing Blake ever about investing into anything. And now he's talking about buying
Gold.
you know, gold. So
Yeah.
I'm just, it's one of those anecdotal, like, whoa, you
Yeah.
know, evidence, like, I don't know if I should be buying gold up here. However, I look at silver, and silver really, really, really looks like crap. I can't believe silver hasn't done anything, really. So
Yeah.
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 So anyway,
Gold too.
right. So Ryan, I was going to say, how was the flow show today? Getting back into the groove. Here, I'll take over the charts from here, Dale.
Okay.
Yeah, it was all good. I was saying pretty similar to you actually regarding yields and dollar yen. There is some scope to see it moving higher because we probably priced as much as we can all the Fed expectations for now. But it's all about watching levels. 145 is my level. There's a bit of one here at 143 that we're just struggling to get through. More of a short.
This is the 200 DMA, by the way, on the dollar yen.
Yeah, 143.05. I think that sits at, depending where your pencil's drawn. But yeah, with yields, I think it's a bit more of a struggle to see yields go higher unless the data is much better than what we're expecting. And as mentioned, we've got a big week this week on the data front. But yeah, I can see scope for dollar yen moving higher. I'm mainly short because I wanted to scratch the BOJ itch and be short into that. And I think once we get a final confirmation that the Bank of Japan are ending their easing policy, that's when we get a last knee-jerk lower reaction confirmation move in yen pairs lower, because then we move on to, well, what do they do after they end negative rates? Does that mean they're on a hike cycle and we're going to have rates at 4% by the end of the year, or does it mean they're going to hike 10 pips every year for the next 20 years?
Correct me if I'm wrong. I'm trying to find the date right now. The BOJ is the 17th. Is that correct?
Well, this month.
This month, yeah.
Yeah, I think so.
I'm looking. I can't remember exactly what the date was right off the top of my head. So I can't remember if it was no, I guess it's not the 17th. I'm just looking right now. Maybe it is in the 20. Oh, here it is. It's the 22nd. So yeah, we have the BOJ the 22nd. So that's going to be obviously a big one. We got obviously a few weeks going into that. But Ryan, looking at the euro, so I want to share with everybody here. I actually bought it yesterday at like 109.50. I sold it at 109.50. I closed it like hours later, like literally like 8 hours later. In the early Asia, I just exited because I'm like, I don't want to deal with it because it wasn't bouncing. I was kind of surprised, but not surprised. But anyway, waking up today, it's back inside of its triangle. Now, one of the things that is crazy about the end of the year and end of the year and end of the
world.
Well, no, just like I guess it's like the end of year flows. You just take a look at this right here, Dale. Like this is all like the last week and a half. I mean, look at that, just false breakout. That was enough to squeeze out so many people.
Yeah.
Anybody that was short the euro, got their, manhandled up here. And most of you all know this. I was selling the euro up at 111 because it was a little silly. And I think this is like a big, long term. And Dale, we talked about this last week. There's a big long-term head and shoulder pattern. That's what I think.
Okay.
And anyway, the thing is, we're back inside of inside of the inside of the triangle that we were in, pre end of year flows. So you got a 38% retracement here at 108.80. You got the 618 that's at 108.80. That seems like a logical target for us over the course of the next, could be a few hours, could be tomorrow. But and then just below that, you got the 200 DMA and the 50 DMA just below that. So I think that the euro still has a little bit more downside pressure before we see some backfilling. I really want to be short the euro. I actually desperately had some orders out last night around the 110 level thinking, okay, somebody just give it to me. I'd love to be short the euro on any rally, but it's just, it's trading heavy. It's not giving you those opportunities, so anyway. But Ryan, how do you feel about the euro here? You were talking a little bit about 110. Are you on the long side, or how are you viewing the euro at this point?
Yeah, I'm still long for me 105, so I've still got plenty of margin in my trade. Yeah, I mean, when we made that first high in November 28th, I think it was, when we first hit that 110 area, the fib from there, the 50 fib was down at the low, 107.27 or something, I think, 30.
Yeah, right here.
A lot of people are expecting it to continue down all the way back down to 105 and keep going, but it kept the trend, and that's why I use fibs in these situations, because it tells you whether the trend is breaking or not. So now we've made this high. The fib, as you said, comes in around that 108.85, I think you get it as, or 75. I've got my fib from the 111 30s, 40s. So that's going to be the first test. I've got my old zone now, 108.70 down to 30. So there's a big confluence in that area, 108,
Yeah.
80, 70, 50, whatever you want to call it. Big confluence. So yeah, take what the euro was doing before the holidays, and it was recovering from that dip. After the holidays, we're back below 110. It's got everything to do again, but the trend is still there. That trend from October is still there. It's still valid. So it has every chance of going higher.
So here's the thing about the euro, and and this is a discussion that we should probably have, is I really still believe that the US is going to, this is the year that you're going to see that US exceptionalism come out, and I don't, again, rear its ugly head, if you will. And I think this is why the US dollar is going to be much stronger this year. Is you get a lot of these higher rates are going to be feeding through the economy, most economies. Still the US consumer is pretty well shielded from this, unless our jobs picture gets really poor, which could obviously happen. I know a lot of people, just from talking to a lot of people, even around our neck of the woods. There's a lot of people that are getting 2 jobs, and they're working 2 jobs to pay the bills. But jobs are aplenty, especially if you're looking at the lower paying jobs. So I still think that the US is gonna do a little bit better than Europe this year, and that's why I think that the euro is going to be a decent short, me personally, and that's why I still really want to focus it on it to the downside. One of the other things. Oh, go ahead.
You get to put that to the test on Friday as well, because we got the flash inflation numbers from the eurozone, and with that last 2.4 reading, if it dips down to 2%, oof, that could be a bit spicy, because that will get the market then ramping up expectations for ECB cuts.
Yeah. These all of this, we have obviously this is a week with PMIs and CPIs, and there's a lot of data that's really going to be feeding into these central banks, and the ECB is going to have to, in my opinion, going to have to walk back some of this this hawkishness that they've had. And that's going to be obviously to the euro's detriment. I'm going to give you guys a little bit of a freebie here. From let me just do this. This is the ForexAnalytix chat room. Obviously, I'm just going to take you guys over to the trades room really fast. I just took off a little bit of my pound yen longs, but let me show you guys why I'm long pound yen. Obviously, I'm bearish yen, and I've been long dollar yen for the last week, couple of days, excuse me. But I want to share this with you guys. So we're holding the 200 DMA. A couple weeks ago, if you go reverse December 15th or something like that, one of my setups on the week ahead video was, look, if the pound yen breaks the 200 DMA, I'm gonna start shorting it. We held it. We actually held it. We've probed it a few different times, but we were trading below this channel. So what happens here is, if you get back above, which is a 24% retracement, which is right here, you can just call it 181. You get back above 181, or you fall below 178. You basically have a breakout trade. This is a do or die type of situation, which my analysis reflected that yesterday. And my 2 cents was, well, your risk is only about 150 pips from the 200 DMA, because if it drops below 177, I think it was like 177.90, you take it off, which is about 115, 120 pips. But your reward would probably be back to the 50 DMA, which is way up here. So you're risking 150 to make 400. The risk reward still isn't bad here, but more importantly, it's going to be more of a breakout situation. So if now I already just took some off, because we're right at resistance, so that's That's, you know, as a, you know, as a trader, I'm going to navigate through this. But what I'm trying to point out here is if you get much above 181, it's going to create a bit of a squeeze. Now, remember, it's a yield play too. And I think that the 10-year yields look pretty, you know, they look like they're threatening to break out, and they should, especially with good data today, because the market's pricing in so many rate cuts. I just think it's, you know, it's obviously lopsided. But, you know, you hear all these macro people, they're like, well, how do you, you know, yeah, you know, there's, you know, the market's pricing in 6 cuts, and, you know, and the Fed dot plot says 3. Well, how do you play it? Well, we're giving you guys actionable ideas here. So if you want to be inside of our community, be in the ForexAnalytix community, because that's where, you know, not, you can just see not my trades, it's other people's trades as well. And Ryan's
You have
very
some good
active
traders in there, Blake, over the years, people that, you know, have hung out with you that, you know, they're
Oh,
very good. They make their living off it.
we got some of the best traders around. They're and the people that have been, I mean, I've been chatting with some of these guys. Like, you take like Benedict, he's been in there for 10 years. Rick and I met in person, and he's having some family issues this month, which I expect him back in January, because we were texting yesterday. You know, I've known him for 20 years. I've met him in person in Dallas twice. Amir, I've known Amir for probably 15 years. Met his wife.
And I know
I've met
you
his
tell
daughter,
me,
you know,
you've told
so
me that you get a lot of ideas from the community, things that you would not have seen on your own.
yeah. Oh yeah, of course. So
And people would think you don't need anyone else's ideas. You know, you're a good trader.
no,
So
I
why
get
don't you
I get
tell everyone what you get out of being in a crowd of good people, good traders, with you know, eagle eyes.
yeah. No, you know, Ahmed asked if this is like you know, is this a live? It's a chat room. You know, there's the general chat room, there's a trades room, you got Flowonomics room, which is you know, the macro chat room where Ryan spends a lot of his time, you know, with all the smart people. Right, Ryan?
I don't know about that. That's
Hey, you
more like
got
the pub.
you got a news and research room, and this goes 24 hours a day. I mean, this is, you know, this is us, you know, this is us 24 hours a day. This is, I got up an hour ago, and this is where I said, you know, good morning. And then, you know, you get, you know, charts, and everybody's posting their stuff. It's not, you know, it's not just me. That's just where you're going to find me all day, until, you know, Asia, until I head out for the day. But yeah, it's a great place to be. It's a great place to be. And, you know, it's, and you're with like-minded people. You're not, you know, that's the thing, is we don't, we have a really good group, because we don't talk politics, we don't talk religion. And if somebody tries to sell anything, we ban them for life, and they'll never come back, and, you know, they're removed. So we don't, you know, it's just people that want to talk about trading. That's it, you know. And sometimes we talk about like the best Netflix show on, because it's boring, like around the holidays. But anyway, other than that, you know, that's it.
I think there's a key point you're saying, just to answer Anise there as well. Yes, it is a chat room, but there's a lot of analysis. So if you think what we do here on F.A.C.E, on the other shows, we're doing that pretty much 24/7 in the chat room. And what we encourage is, when people have a trade, is they put it in the trades room. So it's live, it's there, it's not 8 hours old, it's not after the event. You know, if I trade something, I could put on a trade in this while I'm doing this show, and I'll put it there in the trade room. But it's there for people to see the thinking behind a trade. You know, why have I traded that? Am I just trading it for a technical reason? You know, and that's what I think people learn from, because you pick up ideas from that, you pick up analysis, and it helps you with your trading. It's not just a copying thing.
And yeah, because I don't expect people to, you know, to do what I do, because that doesn't make any sense to me. But I do respect, you know, a lot of our traders in the chat room. Like when Ryan's like, "Hey, I'm buying more euro," and I'm like, "Shit, I'm short." You know, I got short
Blake,
today. You know?
can you give me Harold's having trouble with the links I've provided him, saying they're asking for a 10 or 11 digit ID. Do you have
Yeah, I
a
can. Let me see if I can grab that ID. Hold on. I'll do it right now. Just
I don't
you
know,
guys
I
go
don't
ahead
know
and
why.
chat, and let me see if I can do this right now.
Okay,
Yeah,
I
I'll just add to
opened
what Blake's saying. Yeah, it's a community. It's seeing things, and like Andrew just said in the chat as well. He takes the charts that he sees in the chat room, and he looks to update his. Yeah, it's also validation. You know, do you see something in a chart that everyone's seeing? Because if there's enough people looking at the same moving average, fib, or whatever, that's what moves markets. It's not that there's a coloured line on your chart. It's the fact that you, me, and the rest of the market are all looking at the same fib, the same moving average, and they're going to trade that. And if it's a pure weight of numbers game, if there's enough money trading the same level, it's going to move the market. I can't move the market on my own. Dale, Blake, no one can move the market on their own. But if there's
Well, my cursor
2,000 of
technique,
us,
yeah, my cursor,
That
my
does work
cursor
sometimes.
technique.
Yeah,
It does.
Dale. Hey,
I-
Dale, I put the 9-digit number in
Skype.
that's the meeting ID. So that
Where'd
maybe
you
that's
put
the
it?
number. I put it in the webinar chat. You can see it. And then
Oh,
also here's
okay.
you can just give them this link too. Just you know,
All right.
I'm
Okay,
it's
got it.
yeah. So
Okay, I'll get it to him.
yeah, see if that works for Harold. So and he should be in here any moment. And guys, so just really a heads up, and I'm sorry, I didn't mean to interrupt.
Yes, Hunter.
Yeah, I didn't mean to interrupt you, Dale, but real quick, Ryan, we have ISM manufacturing data today. We have JOLTS data, but we also have FOMC and minutes. Sorry, I just want to make sure everybody knows that it's the minutes. Now, the thing about the minutes is, remember, this is a couple weeks old, and I don't care what anybody says. This is like a transcript, right? Quote unquote transcript. They want you to hear what they want you to hear, right? So if the Fed is looking at the response of equities and saying, shoot, I can't believe that the market is pricing in 6 rate cuts. Are they freaking bananas? The way they can twist that the FOMC minutes today to make it seem more hawkish than dovish, they'll do it. They'll omit words. They'll tweak the language just slightly. So the market will go, ooh, maybe we were pricing way too much. We were getting a little. Those are communication mechanisms that the Fed uses. So usually with the minutes, I don't think that they touch them. But in this case, with the market so aggressively pricing cuts, you know, I don't know. Anyway, hey, Dale, I know you have Harold here. I'm glad you brought him in, and you looks like you were able to get him here. I want to thank everybody for being with us today. Ryan, it's really nice to have you back.
Shaved yesterday.
What's that?
I shaved yesterday.
I'll shave this morning. Happy New Year.
Hey, Ryan, you even shaved. I couldn't even imagine you with a beard and no hair. That would have been awesome. Just kidding. Hey, happy New Year's to everybody.
Hey, show your before we start with Harold, Blake, we talked about the chat room, showed the deal.
Oh yeah. For those of you that don't know, we have a pricing special. It's only good for this week. We will knock it off on Sunday. We only do it a couple of times a year. So if you want the best prices that we give all year long, this is it. We usually wait till January 15th, but we got a lot in store for you for 2024. So anyway, that's the best pricing we ever do, and so you might as well take advantage of it.
Strongest the team has ever been too. So you got, a lot of good
100%.
reasons, confluence. And, confluence with what's happening in the Red Sea, Mr. Harold Malcolm. Welcome back to F.A.C.E. and Happy New Year, Hal. How are you?
Hi.
There we go. How are you, partner?
Good. You asked me about
Yeah.
the Red Sea.
Happy New Year.
Happy New Year to you.
All right. So what about the Red Sea? Shipping rates are going off the, parabolic. People have to ship through the Cape of Good Hope. Africa, they've go around the Horn. Iran sends an antique battleship in there. I think we sold it to them, and we showed them how to fill the leaks. What do you think is happening out there?
Well, in my view, we're at the start of an escalation, and the Iranians want this. They
want the war. We don't, because the administration keeps saying that what we're doing is measured, because they don't want it to turn into a regional war, which is probably a signal that Iran sees as weakness, which means they want to start it.
Right. They put their own Iranian ship in the water a day or two ago as a signal they're coming in to participate. And they struck one of our naval ships with a missile. So Hezbollah is stepping up the attacks on Israel. They're waiting for us to respond. And it's up to the White House. Are you going to make a definitive response or not? This is all wrapped up in Washington politics and 2024 elections. So where this goes,
could it be like, will Biden, which I think he's a completely different person than Obama was, and Obama had that infamous red line in Syria that if they use chemical weapons, there'd be a response, and then there was no response. That was the beginning of our enemies, Russia going into Syria to fill the vacuum. Do you think Biden's going to flinch and not do much about this? And maybe it won't be about us doing anything. Maybe it's going to be about Israel taking them on, since they're at war already.
About Washington, I think we can expect indecision to continue.
Right.
Obama was indecisive, and in some strange way, Biden is following the same indecision path. And I don't think this augurs well. So with this, everybody has to think going to war on any scale is going to up the defense spending for the U.S. It's going to put upward pressure on borrowing by the Fed. So in addition to interruption of supply lines, everybody's forgetting this is going to be a big new pressure in the bond market.
Okay, so the financing of wars, it's very expensive. I've been told by, like Luke Roman, that wars, you don't want to be in the bond market in wars, because countries go into huge debt and rates go up, so you don't want to own bonds. We've had, in fact, I'll show you, since you're bringing up the treasuries, pretty substantial rally in treasuries in the last few months. And, I'm wondering if you think that, I actually think that we're going to have some kind of a correction here in the bond market. That's Apple. Here's the TLT, which is like the 20-year bond. We had this huge rally here, Harold. Okay. This is when the Fed changed the mix of, they went more to short-term treasuries, so it took the pressure off the long end. So with you're saying about war, then this would have been a good rally if you own bonds to get out of them. Is that the way you would view this bond market rally?
That's right. The euphoria went through the markets after the Powell relaxation, but there is no intention for the Fed, no reason for the Fed to cut rates anytime this year. Inflation pressures, we're going to see them picking up. So the only big influence on the bond market for the next few months is Janet Yellen, who will play with the TGA, and she'll play with the composition of short-term issuance versus longer duration. They'll play with the RRP, trying to keep rates down. But what I expect is that the longer duration issuance interest rate is going to go up. We're going to see
we should at least correct, don't you think? I mean, even if the bonds aren't going to new lows right away, there was, probably you and Nick, sounds like you're in the same camp we are here, that there was too much exuberance about all these cuts. Yeah. And the market's starting to take that back from, there's a hangover. All the markets got real drunk into New Year's, didn't they? Huh? Yeah. They did. The financial system was being fed tequila for, I don't know, a couple of months going into the end of the year. And now they have a hangover.
Yeah, but it won't be a typical hangover. It's going to be a painful hangover that lasts maybe 3/4 of the year.
Okay. Are you guys bearish stocks too? They've gotten off to a pretty crummy start the last couple of days, but you're more bearish bonds than you are equities, correct?
Yes. Okay. We expect. We've been right about bond rates for quite some time, and we have quite a few followers among the most distinguished players in the market. Our view is we're going to find the 10-year moving back up, probably to 5.5 or more within 2 or 3 months.
That's quick. Okay, so then this rally in bonds and the 10-year yield at 3.8, that was it.
That was it.
I'm just showing what you send out to subscribers here, Harold. It's a couple a day with different titles, everything from geo to crypto. Even you guys are covering. You're covering everything. Nick Linsman is also a great analyst, and he's the writer. Is he the one that's putting this together, or you have a whole staff now?
No, he does most of the work. We talk all the time, but we have a hell of a good network, and he has vast experience as a trader. He was a major trader for Bremen Howard, and he goes back to the days of Michael Millikan. He's a big-time player. He's just a specialist. But anyway, we believe we have an economy.
I'm big time too, Harold.
Sorry?
I'm big time too,
I know that.
You know where? In my imagination.
Well, I think you're pretty sharp.
I'm a legend in my own mind, Harold. So anyway, okay, let's talk about what everyone's forgetting now. Because since the war in Israel, Hamas in October began, Ukraine, which was the front page story for almost 2 years, we're at a place where we can't fund them. Seems like things are also escalating there because Russia's sought to press their advantage about about Ukraine not getting the aid they needed in time. What's going to happen there this year?
Well, Russia is not gaining. They're falling apart. So aid to Ukraine is falling apart. The Russians are falling apart. Somewhere here, there's going to be real talk about ceasefire. Okay. Now, everybody throws up their hands and says, what does that mean? everybody has forgotten many years ago we had a big battle in motion between South Korea and North Korea, and the U.S. was deeply involved. And there was a ceasefire. That ceasefire turned out to be permanent.
Yeah, right.
And if there is any will at all, my guess is they'll come up with a ceasefire that has that kind of quality to it. Everybody stops, draw the lines. The problem is Ukraine probably has to give up some territory to make it possible. And that's going to be humiliating for Zelensky.
Yes. Okay. So, he's under pressure now. Last year when he came here, he was a hero.
Right.
This time when he came, they treated him like a zero.
Well,
so it seems like he's expendable.
He's inconvenient. And for politicians and thinking about the elections, inconvenient means ignore it, hope it goes away.
Yeah. Well, how about the election in Taiwan then here? Let's get to, one of your favorite topics, China. Xi said this is the 13th, and Xi said this is an election where the choice is not a candidate, the choice is war or peace. What do you think is going to happen there?
It depends on who's elected.
Right.
What China wants is a candidate who is willing to continue dialogue. Dialogue doesn't necessarily have to lead anywhere, but they don't want somebody saying that for independence. They want ongoing talks. Then the Chinese don't have to decide whether they need to go to war. They can have the appearance of continuing talks.
Okay. All right. So I think we've covered a lot of geo. To me, it seems like the flashpoint right now is the Middle East, with it becoming regional, with Iran and the U.S. Having a military confrontation.
Yeah, and I think everybody's underestimating. Nick
Iran.
and I have been explaining for quite some time that Iran seemed determined to escalate, and there's somehow there's a feeling in the markets that this is about Hamas and Israel, whereas Hamas is just a distraction. Now, how far that goes, no one can say. But the way the U.S. is handling it, it's going to keep escalating. In the meantime, what happens to the U.S. economy? We've had all these arguments about, are we going to have a hard landing or a soft landing?
We're at no landing. We're at no landing right now, aren't we?
Yeah.
Except I don't know what all the cuts are. People were pricing in all these cuts and saying there wasn't going to be a recession. So why would you need all those cuts? And if you don't think there's going to be any cuts this year, I would think that you think the economy's going to chug along okay, because there's no need for the Fed to take emergency actions.
That's right. I think the Fed the Treasury will succeed in keeping the economy in motion. There'll be no landing, at least for 3 quarters. I mean, what happens at the end of the year is far away. But the longer duration bonds are going to start rising again in yield, and the cost of borrowing is once again going to become an issue later. It's going to cause credit contraction. That's the big challenge for the U.S. is somewhere we're going to have
a kind of sovereign debt crisis continuing,
right,
because we have to fund because of our funding needs, and
right.
And rates won't go back up because of growth. They'll go back up because of supply.
Yes.
Okay.
And if the Middle East problem becomes bigger, then there will be a resumption of commodity inflation.
Okay. So do you guys have a view on the dollar? We're bouncing here at the beginning of the year, bullish or bearish the U.S. dollar for this coming year?
If you ask me where the dollar will be next 2 weeks, I have no idea. But if you ask me over the year, the dollar will resume strengthening.
Okay. All right. Well, it's begun, so we'll see. I think it has to hold there. Why don't we attack the big elephant in the room, and that's that we have a presidential election here in the U.S. First of all, let me ask you this. Some people from the dark side are saying we won't even have an election. What do you say to that, Harold?
There are followers of Trump who definitely want to have another, whatever you want to call it, insurrection before the election and make the election dysfunctional. Who knows?
How? Look, I've been around a while. You have never seen anything like this political situation that we have here in the U.S. Have you ever?
No.
Okay, so everything's unprecedented.
Correct.
You can't know for sure, but what you do in your letter, and what I like that you do in your letter, is that you lay out different potential scenarios, like you did it for the Middle East. You had 3 different potential scenarios when the war broke out.
Yep.
And so what would be the potential scenarios for 2024 that you think are somewhat likely?
Number one, somewhere between now and the convention, I think it's possible, maybe relatively likely, that Biden will step down and he will suggest Governor Newsom to replace himself.
Okay.
And there would be a new vice president proposed. I think no one should ignore that possibility. Biden, when he met Xi Jinping and other leaders in San Francisco a couple of months ago.
Oh yeah, Devin went to China first before that all happened. So they've already crowned him already.
Yeah, well, I think probably when he went, Biden had sent a signal in advance.
Okay.
He may potentially be the next leader. So there's something going on there that we can't judge, but I consider that a real possibility.
Would he do better against a Trump candidacy than Biden?
Well, that's a good question.
I live in California. There are a lot of people that aren't, crazy about his leadership here. How he turns surpluses into deficits, et cetera, et cetera.
On the face of it, he looks like a terrible candidate, but people who know him, people who work with him, say he's the most eloquent.
He's got a good haircut. He's got a good haircut. So that's all it takes in America in 2024 is a good haircut and, and a Hollywood smile, right?
A better haircut than Trump's, which is always
okay. So is he going to end up with all the numbers say he has the nomination sold up. Will he be on the ticket?
Well, he has a lot of investigations, and who knows how that will play out. This is going to bring turmoil to the Supreme Court, which on the face of it is somewhat biased in favor of Trump, according to the
Well, he appointed what, 3 in his first term?
Right.
3? Yeah.
Yeah.
Okay.
Yeah. So the country, the United States, is in a big crisis in every respect, not only for the election, but for the functioning of the Supreme Court,
Every institution.
and the confusion in the House and Senate, where I think the House will flip the Democrat, but the Senate will probably flip Republican. So, so this hangover that we have, thinking everything's better because of the Fed. As I say, the whole year is going to be one hell of a hangover, and without obvious relief.
Okay. All right. Stock market up or down for the year, and this is what I've been saying is, it's very important what the market is doing in the summer, going into the fall. And if we're in a bear market, I mean, even if we have a good first quarter in the market, but we're heading down in the summer into fall, that would favor not the incumbent party, but the other party.
Yeah.
Do you agree? Huh?
That's going to be a big problem.
Okay.
And earnings, I don't think earnings are going to maintain any strength. We're going to see slowly declining earnings. So stock market has to give way.
Okay. All right. So W.D. Gann said 2024 was going to be a difficult year. So it kind of lines up with what you're seeing. Harold, I hope you have one of your best years ever, and thank you for keeping me informed with your work. Best way for people to get a hold of you and sign up for your letter? It's the best way.
Well, on Twitter and on LinkedIn, we show links how to do that.
Okay. All right.
But I might tell you about what we're doing. Our calls on the market have been really good. And we've revealed them over the course of the year. The decline of the renminbi and the rise of the 10 years. They have been sufficient that we now have some major hedge funds that have asked us to take on a large of that part of their portfolios and trade for them. So as of now, we are also trading in quite sizable amounts on behalf of some major London and New York hedge funds.
Well, congratulations. And I hope that pips rain down on you guys. Hope it's one of your best years ever in the market, and appreciate you. We've been talking for years now, Harold, and appreciate you coming in and sharing your foresight of what you see coming down the pipe with us here in F.A.C.E and edifying the community. I appreciate it. And I could ask you anything and you have an answer for it.
Well, it's fun talking with you, Dale. I like the interaction, and maybe we'll find a way sometime to do it more directly for the benefit of the markets.
Okay, Harold, and I'll get a hold of you, and I'll talk to you in the spring or sooner. Great to have you here and start off our year with you. You're the bookmark of the beginning of the interview season.
All right, good.
All right. I started with the best, so it's all downhill from here. Harold Malgrim, everyone. Find him on X at Hal's Rethink and check out the research by Nick and Harold. And that's a wrap for me. You can catch a team in 15 minutes on the morning edge. And don't just count your pips, count your blessings. See everyone tomorrow. Adios. Thanks again, Hal.
Bye-bye.
Nice talking to you, buddy. Bye-bye.